If you're a senior, an immigrant, a green card holder, or anyone who files taxes in the United States, there's a possible new IRS update slated for 2026 that could substantially alter how you file forever. And I'm not talking about a tiny tweak here. This change has the potential to influence your tax return, your hard-earned savings, and if you're not careful, even your immigration status. Picture this. You've been filing your taxes the exact same way for years, maybe even decades. Everything's routine. Everything's familiar. Then out of nowhere, you get a notice from the IRS saying that you missed reporting something you had absolutely no idea you were expected to report. Now, imagine that one error leading to penalties and an audit or worse, delays in your citizenship application. That's precisely why this update is so important. Starting in 2026, the IRS is proposing new mandatory reporting requirements that directly affect filers over 60 and anyone who maintains any financial ties abroad. The problem, most people have no clue this is coming, and that lack of awareness could cost you dearly. But here's what I want you to know right now. Nothing I'm about to share is meant to frighten you. My goal is simple, to equip you. When you understand what's changing and follow a few straightforward steps, you can avoid these problems completely. Over the next several minutes, I'm going to break this down in the clearest, most practical terms possible. You'll learn exactly what this update involves, who it impacts, and most importantly, what you need to do right now to protect yourself. By the time we're done, you'll know whether this applies to your situation and how to handle it with complete confidence. Look, when the government shifts something this significant, it's normal to feel confused or even a little uneasy. That's exactly why I'm here. My mission is to walk you through this step by step in plain, everyday language without the legal jargon and without unnecessary panic. So, take a deep breath, get comfortable, and let's dive into exactly what the IRS is adjusting and why it matters to you. Let's start with the most critical question. What exactly is this new IRS update? Beginning with the 2026 tax year, which means the tax returns you'll be filing in early 2027, the IRS may roll out expanded mandatory reporting requirements on the standard tax return Form 1040. This change represents part of a much larger initiative by the IRS to improve financial transparency and strengthen compliance with foreign account reporting laws. Put simply, the government wants far more detailed information from certain taxpayers about money, assets, and income that exist beyond U.S. borders. Here's what the update actually means. Anyone who is 60 years of age or older, and anyone who has ongoing financial ties abroad will now be required to answer additional questions directly on their regular tax return. These questions cover foreign bank accounts, foreign pensions, foreign social security benefits, and international money transfers. These used to be questions that only appeared on specialized forms or were sometimes optional depending on your circumstances. But starting in 2026, they become mandatory for millions of taxpayers. This means seniors, green card holders, naturalized citizens, and many visa holders may no longer have the luxury of skipping over these sections or assuming they don't apply. The IRS is also potentially strengthening data sharing between agencies like USCIS and the Social Security Administration. Translation: the report on your taxes will be cross-referenced with immigration and financial records more thoroughly than ever before. According to the IRS, the objective is to reduce what they call unintentional noncompliance. That's situations where people violate tax rules simply because they didn't understand them. But here's the reality. Once this change takes effect, the burden falls entirely on you to answer these new questions correctly and completely. Even if you filed taxes the identical way for decades, your 2026 return may look different, and ignoring these adjustments could create serious lasting problems. That's exactly why understanding this update now before it goes into effect is so absolutely vital. One of the most significant aspects of this change involves major adjustments to the reporting thresholds for foreign financial assets. In the past, many people didn't need to worry about filing additional forms because the limits were relatively high. Under the old system, you only had to file Form 8938, which reports specified foreign financial assets if the total value of those assets exceeded $50,000 at the end of the year or more than $75,000 at any point during the year if you're a single filer living in the United States. But the new 2026 update would slash those limits dramatically for older filers and internationally connected taxpayers. Now, if you're over 60 years old, or if you're an immigrant filer of any age, the threshold drops to just $25,000 at the end of the year or $40,000 at any time during the year. That's a massive shift. It means countless people who never had to report foreign accounts before may suddenly be required to do so. And when we talk about foreign assets, we're not just referring to large investment portfolios. This can include simple things like a bank account in your home country, a small retirement account from years ago, a life insurance policy with cash value, or even partial ownership of family property overseas. In addition to Form 8938, there's also the FBAR, the Foreign Bank Account Report. Now, the FBAR rules themselves aren't changing. You still must file an FBAR if the total value of all your foreign accounts combined exceeds $10,000 at any point in the year. However, what is changing is how the IRS will cross. Check this information. Under the new system, your answers on Form 1040, your Form 8938 if you file one, and any FBAR records will be automatically compared. If you answer yes to having foreign accounts on your tax return, but failed to file the required forms, or if the numbers don't match up, the system can generate automatic notices and potentially trigger an audit. In other words, there will be significantly less room for mistakes, misunderstandings, or forgetting to report something that seems small. This is why even people with modest savings outside the United States need to pay extremely close attention to these new requirements. At this point, you might be wondering something completely reasonable. Why are seniors and immigrants being singled out by this change? The IRS has provided a clear explanation. According to their own research, these two groups represent the largest source of accidental errors when it comes to foreign account reporting. Many seniors have lived long, complex financial lives. Some retired abroad and later returned to the United States. Others receive small pensions or government benefits from countries where they worked decades ago. A significant number simply don't realize that the United States requires worldwide income reporting, even if that income is minimal or already taxed in another country. The same principle applies to immigrants. Millions of people who move to America maintain bank accounts, property, or investments in their country of origin. They may use those accounts to support family members, save for emergencies, or handle financial matters back home. From their perspective, those accounts have nothing whatsoever to do with the United States. But under U.S. tax law, they absolutely do. The IRS believes that many people in these groups aren't deliberately hiding anything. They just don't understand the complicated reporting rules. The problem is that from the government's perspective, whether a mistake is intentional or not, it's still considered noncompliance. So instead of relying on people to discover obscure forms on their own, the IRS has decided to force the issue by making these questions impossible to miss. By placing them directly on the main tax return and lowering the reporting thresholds, the government is essentially saying that no senior or immigrant can claim confusion anymore. Even a small inactive bank account that you forgot about could now require formal disclosure. That's why this change is such a monumental deal and why so many people may be affected starting in 2026. Before we continue, let me pause for just a moment. If what you're hearing right now is helping you understand something you didn't know before, take a second to hit that like button so more seniors and immigrants can discover this information. These changes are genuinely confusing, and the more people who see this, the fewer people will end up with unnecessary problems down the road. Now, let's discuss how this change affects different groups of people, because the impact isn't exactly identical for everyone. If you're a senior who's already a U.S. citizen by birth, you might be thinking this doesn't really concern you, but that's not necessarily accurate. Under the new requirements, any senior over the age of 60 who has financial connections outside the United States will have to answer the expanded questions on their tax return. If you receive a pension from another country, if you have a small savings account overseas, or if you still own property or investments abroad, you will now be required to disclose that information more clearly than ever before. Even accounts that are rarely used or that you only keep open for convenience when visiting family will count. The IRS is no longer treating foreign assets as something only wealthy people need to worry about. For seniors, the assumption will now be that if any foreign accounts exist, they must be reported properly and in detail. For green card holders, the situation becomes even more delicate. As a lawful permanent resident, you're already required to follow the same tax rules as U.S. citizens, including reporting worldwide income. But what makes this update especially critical is the connection between taxes and immigration. When you apply for U.S. citizenship, USCIS reviews your tax history as part of the good moral character requirement. Under the updated system, USCIS may have greater access to IRS data and will be able to see whether you answered the foreign account questions correctly, whether you filed required forms like the FBAR or Form 8938, and whether there are inconsistencies in your records. This doesn't mean that a simple mistake will automatically derail your immigration case, but it does mean that any mismatch or missing information can trigger delays, additional questioning, and heightened scrutiny during a naturalization interview. In some situations, serious tax noncompliance could even lead to denial of an application. That's why green card holders in particular need to be extremely careful and organized once this update takes effect. If you're a naturalized citizen, you might assume that because you're now fully American, these rules no longer apply to you in any special way. But the IRS has specifically included naturalized citizens in the expanded reporting group. The reasoning is straightforward. People who were not born in the United States are statistically more likely to still have financial ties to other countries even many years after becoming citizens. So, even though you're treated the same as any other American for tax purposes, you'll still be required to answer the new questions in greater detail. And for those who are in the United States on work visas or other temporary statuses, the update can matter significantly as well. If you meet the residency requirements for U.S. tax purposes and file tax returns here, you'll also be subject to these expanded reporting obligations. For visa holders who hope to apply for a green card in the future, tax compliance is extremely important. Problems with IRS reporting can complicate visa renewals, adjustment of status applications, and other immigration benefits. In short, this change reaches far beyond just retirees. It touches almost anyone who has lived, worked, or built a life across more than one country. So, the big question now is very simple. What should you actually do to protect yourself? Instead of worrying endlessly, the smartest approach is to take a few practical steps right away. The first and most important step is to gather complete information about any financial connections you have outside the United States. This means creating a clear list of every foreign bank account, pension, investment account, insurance policy with cash value, property interest, or business ownership you might have. Even if an account has very little money in it, even if it's been inactive for years, and even if it's only used occasionally when you travel, it still counts. Write down the name of each institution, the country where it's located, the account number if you have it, and the highest balance or value during the year. Many people get into serious trouble simply because they never took the time to organize this information. Doing this one step early can save you enormous stress later when the update takes effect. The second step is to review your current FBAR filing situation. Remember, the FBAR requirement already exists today and isn't waiting until 2026. If the total combined value of all your foreign accounts ever went above $10,000 at any point in the year, you're required to file an FBAR electronically with the Financial Crimes Enforcement Network. This applies even if each individual account is small. Many seniors and immigrants are genuinely surprised to learn that this rule has been around for years. If you realize that you were supposed to file FBARs in the past, but never did, don't panic. The IRS offers programs known as streamlined filing procedures that allow people to come into compliance with reduced penalties if their failure to file was not intentional. The worst thing you can possibly do is ignore the issue and hope it disappears. Taking action now before the new 2026 system increases enforcement is one of the smartest decisions you can make. The third step is to prepare for the new Form 8938 requirements. Because the reporting thresholds are being lowered dramatically, many people who never had to file this form before may suddenly need to start filing it. If you believe your foreign assets might be above the new limits of $25,000 at the end of the year or $40,000 at any point during the year, begin collecting statements and records now. Form 8938 requires detailed information about each asset, including values in US dollars. Waiting until the last minute during tax season can make this process incredibly difficult. especially if you need to contact foreign banks or institutions to obtain old records. Being proactive will make the transition to the new rules much smoother. The fourth step is to make absolutely sure you're correctly reporting any foreign income you receive. This is especially important for seniors who get pensions or Social Security type payments from another country. Many people assume that because this money is already taxed overseas, it doesn't need to be reported in the United States. But in most cases, U.S. tax law requires you to report worldwide income, including foreign pensions, annuities, rental income, or interest earned abroad. Some countries have tax treaties with the United States that may reduce or eliminate double taxation, but those rules can be complicated and vary from country to country. The new IRS questions on Form 1040 will specifically ask about these types of payments, so ignoring them will no longer be an option. If you're unsure how to handle foreign income, speaking with a qualified tax professional who understands international tax issues can make a tremendous difference. The fifth step, which is particularly important for green card holders and anyone planning to apply for citizenship, is to keep organized records of everything related to your taxes. This means saving copies of your tax returns, FBAR filings, Form 8938 if you file it, and any documents that show the value of your foreign accounts. When you go through the naturalization process, USCIS may ask to see proof that you've properly complied with tax laws. Having clear, well-organized paperwork can turn what might feel like a stressful interrogation into a simple and straightforward conversation. Many immigration delays happen not because a person did something wrong, but because they cannot easily prove that they did things right. Good record keeping is one of the easiest ways to protect yourself. To help you understand why all of this matters in the real world, let me share an example that illustrates how easily problems can develop. Imagine a senior immigrant who has lived in the United States for decades and has always filed taxes honestly. She keeps a small bank account in her home country with about $15,000 in it. Money she uses when visiting family because the amount isn't very large and she never thought of it as connected to her American taxes. She never filed an FBAR and never mentioned it on her tax return. Years later, when she applies for U.S. citizenship, the immigration officer asks about foreign accounts. Suddenly, this small, ordinary account becomes a major issue. Her application gets delayed while she works with a tax professional to correct past filings and prove that the mistake was unintentional. The entire process becomes stressful, expensive, and unsettling. Under the new 2026 update, situations like this are far less likely to be overlooked. The mandatory questions on the tax return would force her to think about that account from the beginning. In many ways, the new system is stricter, but it's also clearer. It reduces confusion and makes it much harder for honest people to accidentally make costly mistakes. There are also a few common questions that many seniors and immigrants are already asking about this change. So, let me address them directly. One of the biggest concerns is whether this affects regular U.S. Social Security benefits. The answer is no. Nothing in the 2026 IRS update changes the way normal U.S. Social Security payments are taxed. Those rules remain exactly the same as they are today. What the update does focus on is foreign Social Security or pension-type payments that come from another country. If you receive retirement benefits from a government outside the United States, those payments are generally considered taxable income here unless a tax treaty specifically says otherwise. The expanded questions on Form 1040 will now ask more clearly about these foreign payments, which means you'll need to report them accurately instead of assuming they don't matter. Another question people ask is whether tax treaties still apply. The answer is yes. Treaties between the United States and other countries can still reduce or eliminate double taxation, but you must properly report the income first in order to claim those benefits. The update doesn't cancel treaties, but it does make it harder to ignore foreign income altogether. Another extremely important topic to understand is the potential penalties for noncompliance. The IRS takes foreign account reporting incredibly seriously, and the consequences for mistakes can be severe. If you fail to file an FBAR when required, the penalty for a non-willful violation can be up to $10,000 per account for each year you didn't file. If the IRS believes the failure was willful, the penalties can be far higher, sometimes reaching 50% of the account balance. For Form 8938, the penalty for not filing when required starts at $10,000 and can increase to as much as $50,000 if the problem continues after the IRS notifies you. Beyond the financial penalties, there are also practical consequences. Failing to report foreign assets can extend the amount of time the IRS is allowed to audit your tax returns. And for immigrants, it can create serious complications with visa renewals, green card applications, or citizenship cases. The important thing to remember is that most people who get into trouble didn't intend to break any rules. They simply didn't know what was required. The new 2026 system is designed to remove that excuse by making the requirements impossible to overlook. Before we move toward the conclusion, let me pause for just a moment with a quick reminder. If this information has been valuable to you, consider sharing this video with any senior parent, grandparent, or immigrant friend who might be affected by these changes. A simple share could save someone you care about from a lot of confusion and stress in the future. As we get closer to 2026, it's important to keep the bigger picture in mind. The purpose of this IRS update isn't to punish honest people. The goal is to create a tax system where information is clearer, reporting is more consistent, and everyone is following the same set of rules. For many years, foreign account reporting has been confusing and easy to misunderstand. Millions of seniors and immigrants have made small, unintentional mistakes simply because the requirements were buried in complicated forms that most people never saw. The new system brings those questions directly onto the main tax return so that people cannot miss them anymore. In a way, this actually provides more protection for ordinary taxpayers. If you answer the questions honestly and keep proper records, you should have nothing to fear. And if you realize that you may have made mistakes in the past, there are still options available to correct them before the new enforcement system becomes even stricter. Acting early, getting organized, and seeking professional advice when needed are the best ways to stay safe. The most important message I want you to take away from this video is that knowledge is your greatest protection. This change may sound intimidating at first, but once you understand it, the steps to comply are very manageable. Gather your information, understand your filing obligations, keep good records, and don't ignore foreign accounts simply because they seem small or unimportant. Small details are exactly what the IRS will be paying more attention to in the future. If you prepare now instead of waiting until the last minute in 2027, you can avoid nearly all of the potential problems that this update could create. Let's take a moment to quickly recap everything we've covered so it's absolutely clear in your mind. Beginning with the 2026 tax year, the IRS is introducing expanded mandatory questions on the regular tax return that will specifically affect seniors over 60 and anyone who was not born a U.S. citizen. These questions will focus on foreign bank accounts, foreign pensions, foreign social security benefits, and other financial connections outside the United States. The reporting thresholds for Form 8938 are being lowered, which means many more people will now be required to report foreign assets than ever before. The IRS will also be cross-checking information more aggressively between tax returns, FBR filings, and immigration records, leaving much less room for mistakes or misunderstandings. For green card holders and people applying for citizenship, accurate tax reporting will become even more important because discrepancies can lead to delays or extra scrutiny. None of this means that honest taxpayers should panic. It simply means that paying attention to foreign financial reporting will no longer be optional. By gathering your records early, understanding your obligations, and seeking help when needed, you can navigate this change smoothly and confidently. The people who prepare ahead of time are the ones who will have nothing to worry about. If you found this video helpful and want to stay updated on future changes that affect seniors and immigrants, make sure to subscribe to USA Move Guide so you never miss important information like this. Tax laws and immigration rules can change quickly, and staying informed is one of the best ways to protect yourself and your family. And as always, I need to remind you that everything shared in this video is for general informational purposes only. It's not legal or tax advice. Every person's situation is different and the rules can be complex depending on your country of origin, your income, and your financial history. If you have questions about your specific case, it's always a good idea to speak with a qualified tax professional or immigration attorney who can review your individual circumstances. Government policies can change, and official guidance from the IRS and USCIS should always be checked when making important decisions. Thank you for spending this time with me, and for taking steps to protect your financial and immigration future. U.S. entry updates, and I'm here to help you stay informed and prepared. Stay safe, stay organized, and I'll see you in the next.